Well, hello everyone, it's Shooter. Welcome to Elliott Wave Charts. Of course, at the end of the presentation, please review our disclosure. Going to start right off with GBTC. We got a new count around 29.27. Of course, you're managing your own book, so whether you want to trim there or not, let me give you some premise here on my thought. Bitcoin is a little more euphoric with a count of 41,120 next versus GBTC. So there is a possibility this pushes a little bit and we do something more like this with GBTC. So, obviously GBTC is a position trade for the majority of you. Now, what's caught my radar, what I've been trying to do is find another vehicle that we can get a little more leverage on. However, MicroStrategy is top on my list, but I don't like the count that we have here. So, I sort of excluded that. Hive, is at a point that's decent. We're looking for our intermediate wave one around 407. So that's something that you could cost allocate into on, a weekly basis or however you're doing that. I think we definitely are at our floor. And I'm looking for about $6 at the same time around that 41K Bitcoin maybe. And then also I'm still a believer in Bitfarms just because it's the low cost producer. When Bitcoin goes to $1.50, we're going 150K, we're probably heading closer to $2 here, I think, on Bitfarm. Now looking at Ethereum, nice little push here. We're getting some follow through here. However, the ETHE, the Bitcoin Ethereum Trust, or the Ethereum Trust, is telling me we're sort of toppy here and we might head lower. So, I would just stick with straight owning Ethereum at this point because I'm not quite sure what's going on with that trust. So that's my thought. Let's take a look at risk for a minute. Okay, I want to address XLE. Our primary wave 2 is down around 82.36, but then we should come right back up. My thought here is that any oil play right now is contingent on the Gaza Strip and what happens in the straits and the oceans around there. We probably are weak oil. So I would suspect that we continue to draw down, barring any additional events. So again, I'm looking at this very much like a hedge for an acceleration in the Gulf area. And what I think our catalyst is our tanker. Because once any one of those tankers is nailed or damaged in any way by Hamas or whatever, the rates for insuring those cargoes is going to go through the roof. And a lot of the freighters are just going to park their ship. We get back up to 10x like we were at other points during peak conflicts when vessels were sunk or blown up or whatever. It got pretty aggressive. So I think that is the hedge against an oil spike, which will also draw down indices. So I'd keep my position a little light here, but that's my thought on energy. And then we wanted to take a look at the SPY. I think we're in this broadening pattern, heading to the upside, but I think we get a decent back test, and whether or not that holds from there is yet to be seen. So either case, I want to back test, but my belief is we still need to back test this 380 support trend channel or trend line around 380. At least it's much more constructive to the upside because then we've gotten rid of all of the sell. Whereas right now we're flipping back and forth still. Even with this push, it still looks to me like we're going to come back off and put in at least one deeper push to me. Looking at the NASDAQ, right at the breakout line at 373. I don't know that holds either. Pretty euphoric though here for the look. We have to go all the way out to the monthly to really get a good visual on where our counts are to the upside. So, we're looking at a cycle wave 3. Let me grab the wrong label. Maybe a target of around 476 should we continue to break to the upside. However, similar to the S&P, we have this wedge look, which suggests that we come back down. It's not broken yet. We get close above that 387.98. That would invalidate that pattern, at least for the moment. But there's nothing that says we couldn't get this wedge that fills out, really into almost all of next year, which is concerning. Let me go back and show that to you on the weekly. We've got that pattern as well on the SPY, and that would, potentially could extend out to a 5-wave, well into 2025. So we're just going to be in this range and it just keeps getting tighter and tighter and tighter. So that becomes more and more challenging to the upside. And one of the reasons I like the flight to quality, as long as that keeps repeating itself, rinse and repeat, everybody wants to go where the moats are. So, that's pretty easy to see. It's pretty easy to follow. It's just, deciding when you want to put that risk on with is your reward. That's really the complicated fashion. So let's look at the Dow. Now we've been, testing this trend support, and I have to go out to the monthly to show that to you, really since January of 2016. So that trend support channel, even though we breached below it, COVID lows, and we overshot it basically and kept going. So drive one, drive two, this is an overshoot. Now we're working our way back up, heading maybe towards 390. The top end of the channel, we could see some rejection up there around 5, which is consistent with the way the count looks. So I think the Dow has some upside here. It's a pretty safe bet, I think. Maybe selling some 320 puts here, 40, 60, 90 days out. I think you're good. If it closes below this 323.52, obviously I'd be out of those, but that's my thought. Now the Russells, I'm looking at this as a bearish look. I think we continue to the downside. I'm trying to stay strategic, and just because this volatility and these pumps that we're seeing when money sum comes back into the market, when we get some breath, it's short-lived. Like breath was, negative for a little bit or positive for a little bit this morning, and then it was negative by the end of the day. So that's a little challenging. You need follow through to hold these prices up. So I think maybe 168 puts, use the monthlies maybe. If you're going to go a little tighter than that and do, 170 put, go at least 2 weeks out would be my thought to short this. And then let's jump over to Gemma. We've got a daily trigger on this, with a primary wave setup that's been there for a while. So, it's a good spot to put a position on if you don't have one. Now, AMTX, Mentis, I was really drilling down into the options. I like the April $5 puts. So sell the $5 puts. They pay $1.60 a contract. Now here's the way I look at the risk. If they get put to you, you pay $5 a share. So, right now you're risking 30 cents, right? And my thought is you could fund January $10 calls or April $10 calls. Now the January $10 calls are $15 a contract. The April $10 calls are $45 a contract. You can blend it up. But I mean, I think a reasonable mix would be 4 or 5 January $10 calls, and then, 2 or 3 April $10 calls. Or maybe even an even mix, do 3 and 3 or 4 and 4 or whatever, depending on what the numbers actually work out for you once you have sold your puts and you have a dollar figure. The idea is to keep a little risk. So the way I see this, if they get put to you, you pay $5 a share. This is a long-term position trade we're looking at with Mentis. So we want to build a position that sort of allows you to do that if those shares get put to you. If they don't get put to you, you really have little risk on the table, and you have all the upside. So, well, that's my take for tonight, folks. Great trading. Until next time.